morning, good afternoon, good evening, traders from across the globe, and welcome to my 1001st installment of Short-Term Trading Live with Oscar Carboni, and that would be me. Hello, traders. Our 1001st video. Wonderful, wonderful, wonderful. And this is going to be a very interesting video. This video is being filmed on Thursday night, April 4th, for trading April 5th. That would be Friday, 2013. Traders, before I get into what's on the board and where we're going next, futures trading is extremely risky and can cause substantial financial loss. If you do not understand the risks behind trading and you do not recognize that futures trading is not suitable for all trading accounts, get up and run, because this is not for you. For the rest of you traders, rock and roll, and let's get started. What do we have? Well, let's look at the board, traders. I have two things on this board, two topics. One, when push comes to shove, formations take the driver's seat over technical indicators. Again, when push comes to shove, when you got to make a choice, go with the formation, bull flag, bear flag, you name it, over technical indicators. So that's one thing that's on the board. Second thing that's on the board is this. As you've heard me say in so many videos, fundamentals always come out in the charts first, right? So here it is. Fundamentals always come out, blah, blah, blah. You know the routine. So why do we have these two topics on the board for trading on Friday? That would be the 5th of April. Well, here's why. Traders, we've just had a down day and the market looks scary and they're on TV and the pundits are screaming and every single person that's ever studied Elliott Wave, they're all out jumping up and down. I knew it, it's the top. They're going crazy, right? We had a down day. Here's what I have to say about this. One, fundamentals come out in the charts first. Even though it's second on my board, I'm going to grab that one first. Why? Tomorrow, non-farm payroll comes out. The unemployment report comes out. Our February international trade deficit numbers come out. And consumer credit comes out tomorrow. I think consumer credit will be big. That's the one that's going to take this thing up. Now, we have, because of something else that's fantastic, formations take the driver's seat. That gives us a green omni for trading on Friday. A green omni. Who knew? I'm terrified. I'm sure you will be too. But first, remember, formations over indicators. Second, remember this, please. When we're all licking our wounds tomorrow because we got stupid and went long, remember you guys used to love me at some point. We had a good winning day today, so remember you loved me after tomorrow. Because this trade is not for widows or orphans. This one is for people who know that formations absolutely do take the driver's seat and fundamentals come out in the charts first. Traders, there's only one thing I can do, and that's take you right into my chart segment and show you what I'm talking about. I think you will see that. Just remember the two topics. When push comes to shove, formations take the driver's seat over a group of technical indicators, over one technical indicator, over your favorite technical indicator. Formations come first, and the fundamentals almost always do come out in the charts first. If you like what you're about to see, come on down to livewithoscar.com. Do not trade alone. Come to my trading rooms where I can help you in the ever-growing army of omniacs that come to my trading room every day. With no further ado, let's go look at some charts. Traders, this very same chart we used last night, I called it flat tops, and I said, look, flat tops give you market drops. Flat top, market drop, flat top, market drop, flat top, market drop. Once it didn't work, and then you had last night's flat top market drop, right? So it does work. Or 2 nights ago, I should say, into Thursday's little pullback down to the bottom of this line. But let's take a larger picture of this. You've got this F flag thing here, and you've got this major support line, which is also a major parallel channel, and the market has come down and hit it. Last time it hit it, it was a buy. It was after a flat top. Last time it hit it, it was a buy, and it was after a flat top. It hit it on Thursday, and that was a flat top. I think that's evidence. Let's look further. When you look at this in a larger context, this is a major parallel channel that we're in, but look at the F flag. Flagpole, F flag, down to a flagpole. Up, long-term F flag, down to a flagpole. Up, F flag, just comes down to the line. I think we just continue right up from here because you're hitting the bottom of the F flag and the bottom of this major support, usually buy area, at the same time. This is for trading Friday, April 5th. I say, time to jump right back into the madness. Get in, get long, put your stops in, and look for more evidence. Want to see? Watch this. You look at the Russell now. We were looking at the daily. We step out to the Russell 2000 and we go look at the weekly for some evidence. Why? Russell and the transportation average were the two indices that pulled us back. They were the two that got weak for the last 2 days and started to pull on the S&P for Thursday. So here we are. When you look at the Russell, you recognize the Russell's in one major parallel channel, then this yellow secondary, really large parallel channel, but then there's this. This is a weekly chart, traders. Support and resistance on a weekly chart is very, very strong and important. Here is weekly support bouncing off this bar, this bar, this bar, then this bar, and now this week's bar. So there's a nice line of support. Let's look a little closer at this line of support. When you extend it a little bit, you realize it has been a very serious line that has caught week after week of highs and lows all the way through. So now you realize this is a really good support line, and Russell just hit it. Let's take that support line and do one more thing with it. We literally just took the line and moved it out and saw if it was parallel and dropped it right here, and look what it does. It catches the whole thing. It's a perfect parallel channel. This is exactly where you would want to be buying if in a bull market and you had a pullback. So our weekly Russell confirms our daily S&P purchase. Then look at the tranny. The transportation average was the other market, the other index that was pulling back when the S&P and the NASDAQ and the Dow were all moving forward. So I figured we'd look at both of those. We saw the Russell, and here is your tranny. Traders, this is a huge weekly chart of the transportation average, and you'll note whenever it gets near this big parallel channel, it's a sell or a purchase. Then we started this new parallel channel in purple, and I will blow that up for you now. Look at this parallel channel when you blow it up, traders. The tranny has found a place to call support. Bang, on the weekly. Last time here, major rally. Here's where it all began. After hitting here, it comes off. After hitting here, it comes off. Very valid channel. One more reason to think. The likelihood is fundamentals are coming out in the charts, and we will see good news coming out of unemployment, good news coming out of consumer credit, making this the purchase. Then, traders, I think that this is a technical setup. Why? You are looking at a 30-year T-bond chart. While I am not saying that the T-bonds have topped completely, this is a chart I have been using for several weeks now in live classes at my site, livewithoscar.com. While we're in the chat room, I hold live classes. Here is a chart of 30-year T-bonds. It's a weekly. I put this chart up weeks and weeks ago in front of my OMNI and said, shoulder, head, let's draw in the size of this shoulder in a blue line and put a fake circle in here and then put fake red lines in and see if this fills in. Traders, there were no green bars in here when we started. So far, it's been 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks that it has started filling in this shoulder almost exactly as we predicted it would. And we think it'll continue to fill in the shoulder, and at some point the bonds will top and follow down that path just like it did on the way up. That's what we're expecting. Another reason to think this. Tomorrow, the figures come out just enough to push bonds right back down and keep it inside of its right shoulder. Traders, pull your own charts, do your own homework. There is my technical thesis for why we are going up in the ES tomorrow. So, traders, you've seen the charts, and there is my technical argument for why we've got the green omni now. Why would I be crazy enough to call this green omni? Traders, I called the red omni. It was perfect on Thursday. I was a hero. The markets look scary. Why am I now getting in front of you and calling a green omni? This could be detrimental to my career on many levels, if you know what I mean. Why would I do that? Because I do not interfere with what I consider the rules of technical analysis and how to apply them towards trading moving forward. Yesterday I had a technical reason to think we were going to go lower, even though the little man in the back of my head said no way we're going to go up, and I called the short and showed you why. Today, believe it or not, the little man in the back of my head's going, what? We're calling a buy? What are you, crazy? But I don't interfere. This is put on the board because of these rules. When push comes to shove, you gotta go with formations. You never break that rule. So that's what we are going to do. We are going to ixnay the indicators because they are as scary as the day is long. If you're going to use technical indicators, they are pointing right down to the basement. So, remember, like I said earlier, just remember you used to love me. There was some day, there was some point in time you omniacs loved me. If tomorrow we're all licking our wounds, you know what I'm saying? After going long in front of this monster. But rules are what they are. And a professional trader, a professional analyst, somebody who wants to act as a professional in this industry, you do not interfere with the rules. You don't change them. You didn't make them. You abide by them. That is my gift to you, traders. I hope this works. Remember, do not trade without stops. Stops go in first. Don't fall in love with the downside, but if this trade doesn't work, your stop will be in, and that's that. Place your stops first. Traders, always remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. And what does that mean? Emotions are out. Rock and roll. Put your stops in first, and remember, the fundamentals come out in the charts first. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.